Today I want to cover the US dollar Canadian dollar, especially since today was an interest rate announcement in Canada at 10 o'clock New York time. And it's also going to cover a little bit of what I spoke about in a previous video about getting into sync with a trade that's already active, but perhaps you were not involved in it because the trend was not in your favor, like our trend line. Even though it's not part of the strategy, it is talked about in the PDF to trade in the direction of the trend. There's no different, better way than just slapping a moving average. This is a 20-period moving average. Or perhaps the trade had triggered and it's pulled back to the entry price, but your signals down here are still green, for example, on a long trade. You can get in sync with these trades. So this is 725 in this area right here, right? 720 on this candle right here. And that is the entry for a long trade. But we don't get started until 8 o'clock, which is just right here. You see, we got a red candle here. But price actually goes up, forms a double top. All right. Now, if you know price action and you see this double top forming, are you going to try to get involved in a long trade again? Probably not. But there's another reason why we don't. You'll see right here, our moving average starts to flatten out. A flat out moving average generally means what? Price is slowing down, price is going into consolidation, especially if it starts whipping back and forth. So even though price does come back in this area again, it does not exceed our price. Moving average is moving over, and right here, we turn red anyway. So any long trade is canceled, okay? Now, even though we talked about getting in sync, there's obviously rules behind that, and you're going to have to put them in your trading plan. But when you see price action saying, okay, we got a double top up here, right? This move didn't really go anywhere. Price is pulled back. It's still extremely bearish. Not extremely bearish, but these are bearish candles here. These wicks, this is more of an indecision candle, but they're all red. And then we get this flattening out. So this little 5-10 minute span right here, all our moves to the upside are now going by the wayside, and we're standing down. Good thing is we start turning over on our moving average. Now our trend direction is now going to the downside. And at 8:25, we get this little green candle right here. It closes bullish. Your entry is at basically 129.28. Price drops. All right, so you just made a quick 21 pips. But there's no exit here. Remember, we talked about exits. You can take these exits here, which are called optimal exits, or you can wait until we get an opposing setup, which we don't get, right? We do get some heat, right? And most traders probably would have exited this trade once it started pulling back. These momentum candles, they're pretty tough. And it also talks about using structure as previous targets. So you might have said, okay, well, this big consolidation here, this big move up. So if price gets down to this area here, I'm exiting my trade, okay? Totally legitimate way to play it. So that's be about 17 pip trade. But you'll see that price pulls back. This doesn't change. This is still strong downwards, right? Can we get into sync with this? Now remember, moving averages, they lag price. All indicators lag price except for price itself. So just by understanding price action, we have a double top here. We come in here, we put in a lower high here, right? What does that tell you to do? Even though we do get a little bit of a turnover here in our moving average, you can see on this candle right here, it changes. Okay, so maybe you're thinking now, okay, it's more of a downside move coming into play. All right, don't trade these things blindly. That's not how you want to trade. Just go by. Oh, well, that's what happens. I can't go bar by bar because that's a big thrusting moving big candle. There we go. That's better. So you could say, okay, well, you may be looking at this and going, well, it's kind of, well, now here is where it goes down, but this trade is already, 5 pips into profit. Are you going to get involved in it? Then you see this candle come in here. So maybe you're saying, you know what? I'm going to stand aside, but we're still down. Price pulls back up. Doesn't have to touch it exactly, of course, right? Support and resistance, highs and lows. These are zones. Understand that in trading. You're not looking at exact prices. Like this area right here, you're looking at a zone of support, okay? Even though it does break. So let's say zones of potential support. Anyhow, back to here. So let's say we're going to use 29.28 as our price, right? We're going bar by bar here. Our moving average is back to the downside. And now we know at 10 o'clock, here comes our release, all right? We are positioned already short, right? The release could go against us, but if you understand interest rate announcements, There's been rumors about Canada hiking their interest rates for a long time now, and there might be more. So they did hike their rates. All right, that's not a surprise. That was already baked into price for the most part. That's why the move that we did get wasn't as big as it could have been. And there's the move here. So using this strategy, you are already positioned. Now let's say we're getting out at this target here, right? At this basing here. This is 109 pips right here. This is a 109 pip trade. Well, let's say you say, I'm going to wait until we get a trade in the opposite direction. Well, this takes you to 2 o'clock in the afternoon, and you're looking at 214 pips. Even though it's called Infinity Scalper, this thing will get you positioned for a day trade that can really, really run. And I think that's what's really great about this. Yes, it can scalp, and scalping is really quick profit taking, right? So if you're just targeting structure, you can make your profit targets as big or as small as you want, right? Just keeping in mind that this right here, when this starts to turn here and you're short, you want to get out of your trade. Here, these are all optimal, right? And it's actually not bad. It's started going consolidating right here, right? And even though there's no strong push to the upside, and this reversal candle here tells a tail, you don't know this is happening. So perhaps you get out here for a measly 100 pips, right? I say measly, but that's actually really, really good. And it took what? How much? Half hour? Or you just trade down to here. Entirely how you play it's entirely up to you. You got to do your own testing. But my point of this is, understanding what you're looking at, understanding price action. This here tells a tail right here, our double top. This tells a tail here. This lower high than these, this tells a tail. This big shadow here, which shows a lot of bulls coming to the market, can't sustain it. Thrusting candle here, rejected, right? So that's what I want to touch on right here. Add some price action to it, a little bit of quote unquote art of trading, right? You don't want to trade indicator based strategies blindly. Have an idea what price is telling you, and click below. You'd also click up here to the right. Get on board. It's a good strategy. I'm a big fan of this. Thanks for watching.